and welcome to this week's LOLC Securities Weekly Market Roundup. I am Megara Vijayamana.
And I am Tharandu Amarasekara. This is the sound of profitability.
Sri Lanka's GDP is projected to grow by 4.5% in 2025, according to a monetary policy report by the central bank. In the second monetary policy report for 2025, the central bank said economic growth is expected to continue its modest expansionary momentum over the medium term. However, external demand conditions and evolving global geo-economic landscape increases the level of uncertainty associated with growth prospects over the near to medium term. CBSL further added that US tariff-related uncertainties can limit the performance of the external sector, market performance, market sentiments, and investments deflationary conditions which prevailed since September 2024 and have eased since March 2025.
Sri Lanka's manufacturing sector expanded at a higher rate to 62.2 in July 2025, according to the Purchasing Managers Index data compiled by the central bank. The growth in new orders and production sub-indices was supported by strong performances in food and beverages manufacturing and textiles and apparel sectors. The employment sub-index returned to positive territory in July. The stock of purchases sub-index increased further. However, supply delivery time remained lengthened during July.
The secretary of the Association for Ceylon Cinnamon Protected GI stated that the global market for Ceylon cinnamon is experiencing a robust growth. He further stated that the cinnamon exports in the first 6 months of 2024 increased from $76.24 million to $95.3 million, which was up by 25% year-on-year. He disclosed that the rise of e-commerce had also expanded the global reach of Ceylon cinnamon, enabling niche producers and exporters to tap into diverse consumer bases. And now it's time for the corporate highlights. Profits of Sri Lanka's Hatton National Bank, which also has an insurance unit, grew by 37% from a year ago to 11.74 billion rupees. This was helped by loan loss reversals and depreciation gains. HNB Group reported earnings of 20.54 rupees for the quarter. In the 6 months to June, HNB reported earnings of 39.25 rupees on total profits of 22.4 billion rupees, which grew by 42%. The net fee income and commission income grew by 20% to 5.7 billion rupees, with card use and digital transactions contributing. Rupee depreciation had helped boost forex income to 2.8 billion rupees in the half year. At standalone bank level, net interest income fell by 8% to 50.1 billion rupees in the June quarter, with interest income falling by 8% to 50.1 billion rupees and interest expenses also falling by 8% to 28.2 billion rupees. Loans grew by 12% to 1,186 billion rupees from December to June, while debt instruments rose by 12% to 828 billion rupees.
Sri Lanka Ceylon Tobacco Company said that its sales volumes picked up to 490 million sticks in June 2025, while profits rose by 2% to 7.3 billion rupees. CTC reported earnings of 39.32 rupees per share for the quarter. For the 6 months to June, CTC reported earnings of 74.97 rupees on total profits from 14.04 billion rupees, which were marginally up from 14 billion rupees. Revenues grew 9.5% from 50.3 billion rupees to 55.1 billion rupees, including a government tax hike boosting turnover-based tax revenues to 38.1 billion rupees from 34.7 billion rupees, giving net revenues of 16.9 billion rupees to the company, up 8.9%. Ambeon Capital PLC, the investment arm of Ambeon Group, has reported a 731 million rupees profit after tax, which shows a significant growth of profit compared to last year. Ambeon Holdings PLC, the group's principal operating subsidiary, which is a leading diversified conglomerate with co-operations across information technology, financial services, real estate, and strategic investments, reported a profit after tax of LKR 677 million, marking a remarkable improvement compared to the profit after tax of 183 million reported in the same period last year. This growth was primarily driven by fair value gains from strategic investments, demonstrating the group's strategic agility and ability to deliver consistent results despite market volatility.
Here is Tarindu with the ESG update of the week.
Due to the effects of climate pollution, satellites used for GPS and communications will be affected more by solar-triggered geomagnetic storms, according to recent studies conducted. There are many varieties of intense solar activity. Some can damage electronics, while some can push satellites out of orbit. The increasing volume of planet-warming carbon dioxide in the upper atmosphere is likely to make the air less dense, while geomagnetic storms have the opposite effect. The ensuing rapid changes in density as a result could cause serious troubles for satellite operations. Here's Megara with the international update of the week.
Discussing the possible peace deal with Russia in the Russian-Ukraine war has paved the way for the possibility for American firms to do business with Russia again. A peace deal or a simple warming of relations between Moscow and Washington could pave the way for what until recently seemed fanciful to most American companies doing business with Russia. According to a list compiled by the Yale School of Management, since the war started, more than 1,000 global companies have either voluntarily exited or curtailed operations in Russia. Household US names like Apple, Goldman Sachs, and MasterCard were among those who left. Yet there have been some holdouts continuing to do some business in the country. The scale of the corporate exodus means there are simply fewer American companies in Russia to generate new business opportunities than before the war. Meanwhile, Chinese firms, including automakers and tech companies, have filled the gap left by their Western counterparts. Russians have also turned to copycat versions of American brands. For example, Star's Coffee emerged after Starbucks exited in 2022.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intel. We will see you in a brand new week.